to know that you're doing it right, Chris, is when your clients get up without you asking and go get the policy, or you generate enough trust and curiosity that they just vanish in the middle of your sit and come back with the policy. That's the goal. If you do it right, you never actually have to ask for it, because so you're not being pushy, you're not being rude. You don't have that initial anxiety as an agent going, oh, how do I ask for this? You don't have to deal with that because you're taking your time, you're writing down little notes, but you're asking good questions in such a way that you're teaching them through asking. You're not teaching them through telling.
Hey guys, welcome back to another episode of the Life Insurance Academy podcast. If you are jumping into this for the first time, you are jumping into the middle of a conversation. We have started a 3-week series. Last week was a session number one, and we are talking about coverage reviews, replacements, and conversions. This is a hot topic. We get a lot of folks who are talking to us about this, and today, again, we've got Zach. I love working with Zach on this stuff because Zach is a technician. He is a scientist. He studies this stuff. He's splitting atoms with this stuff. I don't know if that...
Well, that's funny. Our producer's name's Adam. So
well, he's not splitting that guy. Gross. No, but you are a technician. I think a lot of times agents who do have success have trouble articulating how and why it works. And then they're just saying, "Hey, follow the process. Do what I do." Yeah. So you're a technician. We're going to jump in here, guys. But first, I want to remind you, before you watch this, and you haven't seen it yet, go back and watch the last episode. You're going to get so much out of it. If you've ever felt like, hey, somebody has coverage already, and you're doing the Charlie Brown walk away from the house, and your head's hanging, you shouldn't, because there's a reason why they're buying. There's a reason why they have coverage. The last podcast deals with that. We also talk about discovering policies and also gathering the information so you can move forward in today's topic and episode. So go back and check it out. We're diving in right now.
Absolutely.
Do your technician stuff.
Yeah, I'm going to do it. But just like you said earlier, Chris, the most important part is not to teach you guys how, but why, because we are all different. We have different personalities. We have different learning styles. So if you, some people, they want to know how, but to keep them going, to fully understand, to be able to embrace the emotional side of selling life insurance, to have a true connection, you have to understand why it works. And when you can embrace the how and the why, you become a magician, really, as far as that goes. Like you said, this whole series is really cool because I think it speaks to who we aspire to be, who we try to be, who we hope that we are, is always leaving our clients in a better position. And definitely, Chris, at the end of this series, you will know how to serve your clients better, write bigger premiums, reduce chargebacks, and ultimately make more money. Because we probably aren't going out and serving families at absolutely zero commission, one form or another. So that is very important. I know
there are some people who are listening and they heard write bigger premiums, reduce chargebacks, and make more money. That's all they heard. But if you miss the first part, it's not gonna work.
Exactly. But in order to do that, you have to be in tune with these other things. Yes. So as you said, we're moving into our series 2 here, which is our second part. And really what we're going to focus on now, Chris, is out of this 6 steps portion, we're doing 2 steps each session. We're covering really 3 and 4. And 3 and 4, let's say you boycotted listening to the series and you only listen to one. This will
cancel
give you
the first series, the first session.
You have to have them all. But this is going to be a lot of information and a lot of detail. This may be one of the podcasts that you listen to multiple times because we're literally going to walk you through on role 3, which is the role the presentation plays in replacements. Now, some of you guys might be like, well, I don't use a presentation, or some of you maybe religiously use them every time. We will talk through particularly how that matters in a presentation, what it helps us reveal from the client's information from using a presentation, but most importantly, how to ask for the policy, when to ask for the policy, what are the things we need to cover to know that we're doing the right thing.
Let me say one thing, Zach. This podcast session specifically, because of the detail in it, probably will feel more like a coaching session a little bit. And I just want our listeners to know we do offer coaching and courses. Go to lifeinsuranceacademy.org. You can check it out. We actually have people who jump on weekly coaching sessions with us. We do stuff like this on a regular basis.
And believe it or not, Chris, we actually cover more detail.
Yeah. And they can ask questions and they can jump in and we chat about it and they talk about some results that they're experiencing. So if that's something you're interested in, you can check out lifeinsuranceacademy.org. And who knows, maybe you'll get a cool T-shirt or something if you sign up. Referencing this episode. I don't know. I'm making stuff up as I go now.
You get to have dinner with Chris if you come to Louisville.
Yeah, dude, that is a fact. We can make that happen.
And then we're going to roll into step 4, which is formulating a plan to improve your client's situation. And this plan, you may think it's simple, but it's not. We have, we're going to cover when you should replace, when you should not replace, and then if you are going to replace, what are the different strategies or ways you can put the client in a better position that you may not be thinking of. So definitely want to stay tuned to that.
I want to go back to something you said, and I want to be sure our listeners hear it right. You said formulating a plan. It may sound simple, but it's not. Like, see, guys, I don't know if they're still engaged. Can you give some clarity to that?
Yeah.
Like what is an instruction they can take? Because I don't want to overwhelm them with data and information and
trust me, dude. I'm not a data guy.
Right.
I'm not going to go in data and numbers and push
I do throughout the podcast.
I'm not doing that. But these are real ways, and it's really thinking outside of the box to solve a problem for the client. And what I mean by that is the majority of agents, the majority of new agents, including you and I, when we were brand new, we think about replacements. We literally think, well, there's only one or two ways I would ever replace a policy. One would be if an agent clean sheeted them, which means an agent misrepresented the client's health in some form of way to get them approved for a policy they shouldn't have been approved for. Oh, well, that's bad. Let's get this new one, right? Yeah. Or, hey, my policy is way cheaper than Chris's policy. Take mine. But literally, there are so many other ways to solve a problem. And at the end of the day, that's all we're doing. When we're out there in the field serving clients, we're getting to know them, we're connecting with them, we're learning about their lives, we're learning about the vulnerabilities they believe they have, and then we're seeing the entire situation for ourselves, and we're seeing all the true vulnerabilities, which vulnerabilities equal problem. And then we know our skill set and our experience and our training that we're able to fill that hole or fill that vulnerability so it's no longer a problem.
If you got a problem, you'll all solve it.
We saw, exactly.
That's right.
I like that.
I learned that from the great philosopher, Vanilla Ice. Dr.
Ice, yeah.
So, and maybe the point, Zach, here on that last piece I'm presenting is find one or two that you want to implement. Go back, listen to this podcast, pick one or two other ones. So sometimes, the simplicity comes in your ability to implement and picking something that you think you can make work.
And this podcast will challenge you to be open and expand your thought process that there's not only one way to do it.
Yeah.
And there's multiple options. And I think this podcast would also make you a much better listener to hearing what is said and what is not said about the client and looking at the policy from all angles, gathering all information, reference to podcast 1, before we can really say we're solving the problems. Chris, I'm going to tell you, I've sat with so many agents in homes, and I cringe sometimes when an agent doesn't have patience and they're ready to pull the trigger on just trying to sell a policy. And what I mean by that, let's say they don't have insurance. They're just, before they even really know what the client needs or how much, they're trying to sell a standard $10,000 final expense whole life policy. Or if they have coverage, they're automatically assuming they know what it's going to be for, who it's for, is it right for the client. They're automatically assuming their health is perfect now because they have a day one coverage already, regardless how old it is. And the only thing they're trying to do is do a quick replacement on price without anything else and leave the home.
Yeah.
And that's not necessarily the right way to do it. So hopefully we can change that.
Yeah. So let's go ahead and jump into this presenting the presentation. And when you talk about presenting the presentation, we are also talking. So this is face to face, and if hopefully you have a presentation. Some people I know I've written with these agents just are pure selling off their personality, and they're missing a lot of opportunities because of it. Hopefully you're using one. Ours is a principle-based one. We'd recommend it for face-to-face sales. We also have scripts available for telesales, and they're based off the same exact principles.
Exactly.
So whether you're face-to-face or you're on the phone, this is true.
When I say presentation, it's whatever we are presenting to the client, and that can be in the form of a script. It could be in a form of a flip chart. It could be a form in a pamphlet or a brochure, but it's whatever we are presenting there, because it does have a purpose behind it.
Cool. So let's jump into this. When I know a lot of people are thinking, when is the best time to begin asking for the policy?
Well, here's my question to that, Chris.
Okay.
Do they want a 45% closing ratio on this policy, Sid, or 95%?
What do you guys think?
And that may sound confusing, but the truth is both work. Like, you can ask to see the policy sometimes early on in the sit, and it may work. You may end up getting a policy at the end of this sit with this client. You may, right? But you may not. They may react different. They may shut down. Their wall may go back up and close, because all in all, the client has a wall that's built up higher than ever when we first contact them over the phone or we first knock on their door. Who are you? Why are you here? What do you want, right? Our goal is to diffuse that, get around that, get into the home, build core, which we referenced, children, occupation, recreation, motion. All of this is designed to connect with them and lower that wall. Sometimes when we try to ask for that policy, following core or at the beginning, oh, you said you had coverage in place, right? We're trying to fast track the process. That can immediately make them back up. You're trying to cash in all your trips right now, and it can backfire. Whether if you just stick to the plan and you play it slow and you take your time and do a quality sit, you're probably getting that replacement 95% of the time, no matter what. Some form, you're going to leave the client in a better position. It's almost a guarantee. So back to the question is, do they want a fast maybe or a slow guarantee?
Let's get to the 45%. I'm just kidding. No, I'm sure. And here's another question. I think a lot of agents are probably wondering about is how many times are you asking for it? Is it 100%? I mean, if they have a policy, do you trust them? Are you taking their word for it?
So here's my goal. No, I don't trust them until I find the information either on a written policy, and then I'm still calling the carrier to confirm it's accurate or still in force, or I'm talking to the carrier, period. I will never trust what they say, and I can never make a true advisable decision on their behalf or help them without actually knowing the numbers, just going off what they say. I mean, I've been in this business long enough. They don't intend to, but it's probably not accurate.
Right. Yeah, they get it wrong all the time. Coverage. We talked about this in the last episode. Yeah, there's tons of opportunity there. So when you get into this, man, let's go for the 99%er. Let's do that. If you guys are cool with that.
Yeah,
I think they're cool with it. Let's do it.
I think so. So talking through like the difference between following the presentation or following core. Like I said, that comes between that 45 to 95%. The true reason why I don't want to do that is because the presentation has so much value, right? Our scripts have so much value. There's certain things we need to uncover. If we don't understand the full detail of their vulnerabilities, the more detailed, the better, then we can't really have the most customized plan, and they won't believe that we have the most customized plan that fits their problem perfect, right? So we want to make sure we go through our 5 real reasons, which is trust, need, want, urgency, and money. I want to establish all of those. And to know that you're doing it right, Chris, the way you measure that is when your clients get up without you asking and go get the policy, or you generate enough trust and curiosity that they just vanish in the middle of your sit and come back with the policy. That's the goal. Like if you do it right, you never actually have to ask for it, because you're not being pushy, you're not being rude. You don't have that initial anxiety as an agent going, oh, how do I ask for this? You don't have to deal with that because you're taking your time, you're writing down little notes, but you're asking good questions in such a way that you're teaching them through asking. You're not teaching them through telling.
Right. And on the front side of this, in the core side, we've made ourselves likable and relational.
Exactly.
And that's all we've got at this point. And if we're asking at that point, we're just asking based on our likability and our relationship that we've established. We have no credibility. Mm-hmm. So trust is built, you'll hear this in our training, but trust is built through authority and empathy. And once we do a little education, once we share some of the carriers we're connected to, the people we've helped, and they see we know what we're talking about, that trust is established. We have the authority. They know we're human beings that care. They're willing to work with us.
Absolutely. And I think you have to, as an agent, it's our duty. We're professionals, right? We're no different than, slightly different, but we're not really different from anybody in a profession. A doctor's a professional, right? I mean, you're getting paid for your career, what you're doing. An NBA player, an NFL player, a golfer.
I'm very similar to an NBA player.
It was that or WWE star. Right. It was one of those two, but I'll go NFL.
I've done off the top before.
But we have to understand the layers of need in our market that we're serving. If it's mortgage protection, if it's final expense, we need to know ahead of time all the different ways we could serve clients, all the different types of policies that help serve those clients, and really understand the different layers of need. And Adam, you may be able to confirm, but I believe episode 63 is peeling back the layers of need off the top of my head. And that would help speak to this more of before you're going into a sit, you need to know all the ways that we can serve a client and why that's important is, Chris, because generally when we're in a home, the clients are only looking at the first need. I don't have anything in place for my final expense, or I already have something, but I think it's enough.
Right.
And it may be $8,000 to $10,000. They don't think about layer 2, which is the future cost, and layer 3, which is, it just keeps going on, right? And in that podcast, we actually determined that every single client, we know they won't be able to afford it, needs at least $100,000 to $120,000 in permanent coverage, right? But affordability we know is an issue in this market. So we have to be able to get them exactly what they can afford. 68. That's 63? 68. Yeah, episode 68. Thank you, Adam. And then also, we need to understand the difference between life insurance and burial insurance. And you may be thinking, well, life insurance can be whole life term. Burial insurance could be whole life or term, right? It could be either one. The difference there is it's what it's intended to be used for.
Correct.
Because if you use your burial insurance for the life insurance, then you have no burial insurance. If you use your life insurance as your burial insurance, well, now you have no life insurance.
Right.
And the distinct feature there is what it's intended to be used for. Life insurance is meant for the living. It's meant to take care of the people that are living that you leave behind, right? That could be some sort of emergency fund. It could be to pay off the home so they don't have a mortgage. It could be to supplement loss of income, which is one of the biggest things that a lot of agents don't even consider. Like that's one of the biggest needs out there. It's the most expensive need out there, to supplement the loss of income, where burial insurance is strictly designed to take care of the passing of the one that passes away. This is your fixed cost. This is your basically the money goes to something that other than the living in the family, such as the vault. It could be the burial. It could be the cremation, the services, the food.
Travel for family.
Travel for family, right? It could be a final wish of a small family vacation to celebrate the life. Like all of those things are meant for the burial insurance.
And Zach, just to clarify too, because we live in this world of simplified issue, probably true of life insurance and mortgage protection coverage. Like their existing life insurance was purchased for a specific reason. It was to solve this problem. Mortgage protection is supposed to take care of the house.
Oh, that's a great point there, Chris. But even if you're in the mortgage protection market and they have, let's say, a good term in place, right? Now, what do you intend this to cover? This is for my family when I'm gone. Well, what exactly does that mean?
Yes.
Is this meant to pay off the home? Mm-hmm. Is this meant to pay for your burial and your costs, right? Yeah. Because now is this meant to supplement your spouse's income? Because there's 3 distinct needs there, mm-hmm. and now we're looking at a certain amount of coverage. Well, for one, it's just enough to take care of the house if they pass.
Right.
Okay. Well, how do we supplement the income? Right? You make X number of dollars a month. Mm-hmm. Now that's going to be gone because I'm assuming in mortgage protection they're not on Social Security. Correct. Even in final expense, sometimes, one of them would be, yeah. Right? Mm-hmm. Which in that case, it's even more, prevalent.
Yeah.
But now, what about that monthly income over a course of a year, over a course of 5 years? How long are we actually going to protect our spouse with loss of income? Now, we expect that money to pay for the house and loss of income?
Right.
Not to mention the burial. Is it going to cost, depending on the age, the future cost of burial, is it going to be 10, 20, maybe 25,000 for this burial, the arrangement, headstone, all kinds of things? Now we want that to come off the house too? So how much is actually going to pay off the house? Or are they going to have to do a reverse mortgage, right? These are all questions. These are all ways.
I mean, lots of stuff, man. I mean, long-term care issues, mm-hmm. losing the home as a result of somebody going to a nursing home, all of that is included in that discussion. So,
but to your point, the client thinks they're solving one umbrella problem. They need life insurance, right? So they get any life insurance, which not a bad thing. They get any life insurance, and then they think it's going to cover everything they ever needed, right? For the same amount.
Right, yeah. Right. So we just went on a huge, important rant. I don't know if it's a rant, but important key pieces here. But this is still tied to the presentation because the presentation and the script reveal these things. Mm-hmm. They are the things that reveal that most agents aren't even thinking about in the sit in the first place or on the phone when they've called. So this is the difference of following core and trusting the relationship. You're banking on a relationships. That's why you say 40-something% to working through the complete process mm-hmm. and allowing those needs to be revealed, being patient enough to allow those.
Chris, you could have said that any better. Like literally the presentation, instead of the only way you could do this without a presentation is if you like literally memorize a presentation in your head and you're doing it just as you're holding one, right? But yes, this reveals all that for you, so you don't have to.
Matter of fact, we just I did a coaching session with a mortgage protection agent who was going through a slump, had a script in their head, was not addressing any of these needs, mm-hmm. and the next day he texted me and said, "I had 3 sits, 3 sales."
Absolutely.
Adjusted the script based on the same conversation we just had.
Now, if I remember correctly, he was also utilizing, originally you had worked with him on a script and gave him, I believe, a script that we find successful. I think it's on our website.
Correct.
And mm-hmm. then over time, the agent looks at confidence and believes they can do it on their own. Yes. And then the telephone mm-hmm. game happens where the words start shifting, everything mm-hmm. start changing, and all of a sudden you're so far off path.
Anymore.
Exactly. Mm-hmm. I think that's awesome. Before Adam gets upset with us on timing here, yes. Let's talk through a couple tidbits on what you can say in order to ask for the policy. You're like, okay, we talked about the policy. Maybe I agree with you guys that I'm going to wait to the end of the presentation. I'm going to reveal everything, and then I'm going to ask them to get it. Or I just want to be eager and ask for it anyways, and then learn and go back and listen to the podcast and then do it the other way. But a couple ways that you can ask for that. And it matters how you ask for that because this trust piece, Chris, is so important in everything we teach, right? Because it just builds on itself. But as we're moving through, one way that I ask that I find really helpful is, Mr. Chris, in order for me to put your family in the best position possible, we need to know exactly what you have on your current plane. Can you go grab that for me real quick and we can take a look at it? It's really that simple.
Yeah.
Right? It's just like asking for the client's social security number. Everybody freezes up and gets scared.
Yeah.
And you just ask for it. It's no big deal. No big deal.
This next one is one of my favorite ones because a lot of times before I had this process in place, I'd say, go ahead and grab your policy or something like that. And they'd say, I don't know where it is. I'm like, they don't know where it is. This is your life insurance policy. Where is it?
Mm-hmm.
And then I realized, they're probably just saying that. They're not, they know where it is, So I started to ask this question Zach,
I think I know you're going with this.
Yeah, if you were to pass away today, where would your spouse, we'll say Jenny, where would Jenny
From the block?
Jenny from the block. Where would Jenny from the block go to find that policy? And then they'll say, oh, it's under my bed. It's in the third drawer in my dresser. Okay. Now, I do it. We have different approaches in what I try to teach agents because they don't have the posture. Some agents don't have the posture that you have. And you are very good about asking. I generally tell them to tell them, like, I'm going to need you to do me a favor. Go ahead and go grab that policy. I've got a couple of things I need to check on. And I go in my binder and I just start looking at,
Do you do anything different if Jenny's sitting right there next to me? Like if you have a couple?
Well, I'll ask now, if something did happen, where is she going to go for those papers? Where is she going to go for that policy?
Have you ever played,
you can't talk. You can't say anything. Yes. Yeah.
Mr. Chris, if you were to pass away today, where would Jenny, or where would Lisa go to find your policies, right? The moment he starts talking, no, you're dead.
You can't talk.
Lisa, where are they?
Yeah.
And she, I don't know where they are. He keeps them.
Dude, it's selling to couples. Maybe we can do a podcast on that.
Selling to couples would be a great one.
Yeah, that's a good topic for sure. There's a lot of powerful stuff you can do.
But now they reveal another need of he always took everything or she always took care of everything.
Yeah.
The other one doesn't know typically where things are, what to happen. But that's a great one, Chris. That's a great one. Sometimes, we hear stories, but, if you don't want to ask directly, you can figure out where they would put something like that. Like Mr. Chris.
You need a set of binoculars sitting in front of their house.
Mr. Chris, where do you normally put like really important papers or like bank information or life insurance policies or anything like that? Do you keep them in a safety box or a special drawer? Or do you keep them like in an ice chest or an ice box?
Do you really? That cracks me up. Do you say that in an ice box or an ice?
Chris, do you know how many policies?
What is an ice box? I don't even know what an ice box is.
It's a freezer, a deep freezer or something.
I'm from the north, bro.
Dude.
Like we call it a freezer.
You call it outside.
You're not in your head like We call it outside.
No. This is why. So running.
You get your milk on Thursdays from Billy.
Do you know how many times I added that to this over the years because I would ask to get their policies and they're like, oh, I keep it in the ice box. And I'm like, your policy. I was talking about your policy. Yeah, that's where I keep them. And I'm like, well, I've never seen that before, right? And they literally will go to either a deep freeze in a back room or right there in the kitchen, they open the freezer like they're going to grab a popsicle. They pull out a thick Ziploc baggie and it's got all the policies in it. Because their house ever catches on fire, it's going to be safe. That's why people do that. Yeah. And so I started asking about that, and they're like, oh, yeah, I usually keep all my important papers over there. Perfect. Now, would you be able to go grab your life insurance policy out of there? Now they can't tell me they don't know where it's at. Right. Yeah. It's kind of like a little reverse trick of getting that one. But once we have those policies in our hand, Chris, it's really important for us to know what to look at, right? And we're not just searching for a price or some type of premium. There's a couple things that we want to take notes on. And a couple of these things are really the policy and certificate details. Generally on the first page, you're going to see the type of policy, generally whole life, term life, universal life, whatever is going to be called is generally going to be on the front page or the first couple pages. Typically a policy consists of 3 pages of important information in the front, a whole bunch of
legal jargon
in the middle, and then maybe a photocopied of the original application in the back. So
when you talk about the details, you have the type of policy. Mm-hmm. The other thing I'm sure you're looking for, you said illustrations, but sometimes it's not an illustration. It will be the terms of the policy, if it's a term product, or
so I want to know
cash value
when they took it out. Kind of how many years ago, how long that was ago, the type of policy it is, make sure it is a legit coverage. I say it was, so it's not accidental or something like that. Sure. I want to check.
The face amount matches what they said.
Face amount matches what they say. I want to verify that the proposed insured is that person, because I can't tell you how many times that they're the owner of a grandkid policy that they think they have coverage. And then when we look at I call it the illustration page. it's kind of an illustration, but it's usually on page 3 where it has all the numbers in a list form. Just
for clarification, because sometimes they
generally
could
on
be
page
different
3
for like an IUL or an indexed universal life policy,
where they actually have to send
illustrations,
real illustrations. But typically in a whole life policy, it doesn't change, so they're pretty accurate.
Yeah,
you're going to have the face amount in there, and you're going to have the death benefit amount. Which a tip to that is, in the first 2 years of the policy year, because this sheet goes all the way down the page, on the left side is the number of years. First 2 years, if it's blank, it's some sort of waiting period plan, right? Or if it says year 1, it has the full face amount available, it's a day 1 coverage. Little tip. But it's also going to show us what the anticipated cash value would be at the end of that year, and so on. But I want to check the monthly premium. I want to check the monthly payment date, so I know if I'm going to be moving forward in a policy, I kind of know the date we're playing with as well. So those are the kind of information we're looking at. And then very important, I always want to take a look at the very end of it to see if there is a photoed copy of the application on the back, to see if the agent was honest, thorough.
Yeah, honestly.
Also, sometimes there's medications that your client may forget about that may be listed on there, or health conditions. We want to make sure that we're doing a good job in the underwriting as well.
That makes sense. Cool. So at this point, you've gathered a lot of information, and that is probably the biggest step that I see agents making the mistake of. They immediately think of price, like we talked about previously, but now we have all this data. That data allows us to start to formulate a plan. We understand need. We know what they're trying to accomplish. They verbalize some things that they probably didn't consider before. So at this point, we're starting to package this together and come up with something for them, right?
Absolutely. That's it. It's now time to formulate our plan. What are the available options? How do we know where to go from here? Really. The first thing is we'll cover when is it good to add coverage to their policy.
So formulating a plan, first option, add coverage.
Yeah, because I'm not typically going in the home just trying to do anything and everything to sell the carrier I have, right? Again, the whole title of this series is leave your client in the best position.
Right.
If you struggle with that, pretend it's your mom or your grandparent in that home. What would you do for them? Pretend that you did not get paid whatsoever. You got paid the same exact amount for going to this home and advising them, regardless if you got a policy or you didn't get their policy and you just organized their paperwork. You get paid exactly the same. What would you do? That's the question, okay? So the first thing we're going to talk about is options on when we are going to decide to add coverage to their policy. The first one is typically if the client's health has changed. A lot of these policies have their health, they are simplified issue, but they have health questions. They do a prescription check, an MIB check, and so on. And a client may have qualified for a day 1 coverage or even a modified coverage before in the past. But now we are beyond that waiting period, or their client has their health has declined since they originally got their other policy. That doesn't change the fact that they may need more coverage or another vulnerability that we're trying to take care of. So in that situation, our first option is going to be look to add an additional policy based upon their new age, their new health, and keeping the old one in place. So now they have a combined larger amount of coverage.
Okay, that makes sense.
When we talk about
vulnerabilities,
yeah. We're talking about, like in the situation before, we talked about a waiting period of contestability, right? Contestability is something that's very unique. It's obviously one of those things that a lot of agents don't know about initially if you're new into the business. But basically what it means is the insurance company has the right to contest, or fancy word for saying, look into the client's health history and background to make sure that they truly should have been able to qualify for that plan if they were to pass away in the first 2 years of owning a policy. Now, right or wrong, beyond the 2 years, if the client has had that active policy for longer than 2 years, the insurance company doesn't have the right, and they will not spend the money or resources because they legally, backed by the state, they cannot change the determination on if that policy is going to pay or not. Long story short, if they've had the policy over 2 years, it's going to pay out regardless, no matter what.
Yeah.
As long as they're keeping the payment up to date.
Correct.
If they are beyond a waiting period, just like we used in the previous example, or let's say that they have a really unhonest policy. I don't know how you would say that. An agent had unintentionally or unintentionally clean sheeted a client, but it's been 4 or 5 years later and you're beyond contestability. It's in your client's best interest to keep that policy and add a coverage.
Okay. And then, and to clarify, Zach, I don't want to beat a dead horse here. If you have, let's say you have a client who has, let's say they had cancer. We'll use that as an example, okay? And they're 2 years past that cancer. They had a guaranteed issue. They have here's a very specific example, okay? They're 3 years past their cancer.
Ooh.
They're taking she had breast cancer, and she's taking a pill that she's going to take for 5 years. Some carriers, that's going to qualify. Okay, I'm just giving a real example here. What are you going to do in that situation?
Well, for one, I wouldn't do anything different than what we're teaching. I would obviously go through the entire thing, figure out what they need. What like, let's say she's really needing additional coverage. If she was on some sort of guaranteed issue, we're just beyond that guaranteed issue. We will look at all her other health. I don't want to. If there's any gray area, I don't want to risk it.
That's what I was.
It
looking
does not
for.
make sense.
Right.
If it's crystal clear, and I talked to the underwriters at the insurance company I would look at, and they could get a day one coverage now, and because they were on a guaranteed issue previous, generally those carriers are limited, so there may be other benefits or extra features to another company that this client would want to take advantage of.
Right.
But because they were guaranteed issue, their price is extremely high. So in this situation, I may be able to get her cash back, save her monthly premium. I would be able to get her the same, if not more coverage for the same price, more different benefits and features that will help her, and also not lose a day of coverage, like getting that day one of coverage. And depending on what state you're in, like for example, in Kentucky, if we fill out a replacement form, that contestability will actually transfer and not restart in Kentucky. And some states are like that. Some states are not like that. So you would have to look at all those different variables. But if it's gray or if it's unsure, do not risk it.
Right. And the thing I like, Zach, that you said is you do call the carrier, get a risk assessment. What I do is I will get the name of the person I spoke with and put it on the application along with the medications that
in
are
the underwriting
question.
department.
Yes,
that's really good as well.
Yeah.
Yep.
I put that on the application. So
that's awesome.
They like that stuff. They like the details.
Yeah. So I want to ask you some questions, Chris. As far as when, now we're going to focus on when you would kind of replace. Okay. All right. When you say we would replace when the client technically has the wrong coverage, what would you say classifies as the wrong coverage?
And let me credit our presentation, scripts, whatever we're talking about here. I think these are revealed in that process because I've had people say, I have $30,000 of whole life coverage and I pay $15 a month. And really, they think it's whole life, and until we pull it out and take a look at it, or we do the education, they start to question it a little bit, and then I can ask for it at the end, or they get up and go get it anyway. That's not the permanent coverage they need for final expenses.
Right.
So that happens a lot.
Or units of accident added to a policy.
Right. Yeah. Yeah. Something like that. They have, they believe they have 30,000, but it's really 15,000 of whole life, and it's 15,000 of accident coverage. They believe they have a final expense policy, but it's a cancer policy. That happens a lot. So there's a lot of situations.
Yeah, it could
where
be
that could come up.
It could simply be they
think
have
of
some
insurance
sort
as
of
a big ball.
They have some sort of increasing term.
Yeah.
Or put it this way, we just talked about they have a guaranteed issue plan they got through the TV or the mail,
Right.
and they're healthy as a horse and
They're
take
eligible.
no medications.
Right.
Right. That could simply be one.
Or
but
an IUL that wasn't properly structured and it's expired, or it's going to expire.
exactly.
I can't tell you how many times we've been in that home at the moment when it was about to expire. And then let the paperwork, here's another tip. Let the paperwork or the company tell them the bad news. Like, I'm not telling them it's a bad policy. I tell them it's served its purpose up to this point. We get on the phone. They tell them the date.
Why does that matter?
Well, because then you look like somebody's going to shoot the messenger. I don't want to.
You're exactly
I'm dodging bullets.
But then they also may assume that you're telling them false information
Right.
in order for you to have an ulterior motivation.
Sure.
Right. But I think that is a huge tip. One way we want to replace it is if the client is a newly policy in place and we can simply they're just paying entirely way too much
Right.
for that coverage. And that could be because every insurance company out there has their own kind of specialty or niche for usually health, or they have their own ideal client that they want. And maybe when you have the option to represent a numerous number of companies, you're able to really know what is the absolute best option. One could be, I think you already said it already, of the policies on financial risk.
Right.
So it could be some sort of
term that's increasing to astronomical amounts that they can't convert, or if it's some IUL.
right at like the year one after a 20-year term that they've had that they thought was forever. Or, like you said, some sort of universal life policy that was put in place 20, 30 years ago, and it wasn't properly funded from the beginning, and it's in risk of collapsing. All of these are ways why we would really want to look out. But we can't forget, no matter what we do, is we cannot forget about the whole picture, the whole story of what's best for the client. Because this is, and I do want to say this before we move on to the next section, it's very easy for an agent at this stage, when we're looking at a policy, we're reviewing the policy, to forget about the two most important things is what's the policy intended to cover and who it's intended to protect, right? Like, it's easy to forget that because we start diving into policy, price, benefit, and we get away from the whole reason why we're there. So do not lose sight of that.
Yeah. And that's where 90% of the failures happen. And just slinging coverage.
Slinging insurance.
That's right.
Yeah.
So we're at a point where we're going to start. I guess you would say this is approaching the sale, but it's advising them of their options.
Exactly. So now that you should be educated on, and the whole previous section was you should know and trust yourself and your character and your training on when to do the right thing. Again, our series is leave your client in a better position, not leave them inclined in the best position for you. Right. So we need to understand that. Now we know when to replace. We know when to not replace and just add coverage. And now I'm going to talk to you about if we are going to replace, what are some different things to consider and look at and open your mind. And we might go through these kind of quick.
Yeah, Adam's giving us the signal.
Yeah, he is.
He's the boss. He's going to power down the lights.
Yeah, I'm going to have to split Adam here in a minute. But I do want to let you guys know that there's been a full detailed training on this in our coaching series that's already up on the website. So if you really want to check it out and get detail on, okay, how do you do this? How do you say that? I really like that other approach. That's pretty cool. We'll kind of go through them a little quick. The first one's pretty simple, Chris. It's replacing it on price. Our value add here is, with everything else considered, again, health, all of those things, all those are taken care of. This is a lot better financially situation for a client who's already in a financially tight spot.
And you're measuring that in one of two ways. And hopefully I'm not jumping ahead, but one is price. There's an opportunity to save money because they're in a tight budget. Mm-hmm. The other is if you could add additional free coverage. If you could write a free check to their daughter, Kathy, for $5,000, how would that make them feel?
Exactly.
And then you can
give them a little nugget on that, because they may be like, well, what do you mean? If they get $10,000 and it cost $80 and I got it $10,000 and it costs $70,
right.
It's a replacing on price.
Right.
But I know what you're going with that, and that's really important.
Yeah, there's a reason there might have been a reason why they chose that. There's a reason we're in the house. There's a reason we're here because there's an additional need, and sometimes there's not really any more that they can afford to add to that need, right? Mm-hmm. So there is an opportunity, if there's a price opportunity here, to be able to increase the coverage. So keep the premium at the same amount. Mm-hmm. And then they're getting additional coverage for free. It's literally free coverage for them.
I'm going to reference back to the previous episode of podcast and gathering information and those questions that we talked about and walked through. One of the question was, why did you only get that amount?
Correct.
Why did you only get $10,000? Yeah. And the answer probably is going to be well, that's all I could have afforded.
Yeah.
Right. But now we know in this situation, even though our policy is $10 cheaper, we know at the end of the day, we got this coverage in place for a reason. And we know she can afford $80 because she's been paying $80 for the last 6 months without an issue. Mm-hmm. And it's extremely important with her to take care of her daughter. So what if, and what Chris is saying here, even though we can get it cheaper, there's the reverse side of that. What if she continues to pay $80, but now she gets $3,000 more in coverage? So now she gets $13,000 for $80 instead of $10,000 for $80.
Correct. Mm-hmm.
And that's where Chris presents that. He doesn't say, hey, I can beat your price, and hey, do you want to buy more with that price? It's, what if I was able to tell you and show you a way that I can give you $3,000 to go to your daughter for free? It doesn't cost you a thing. That's going to spark interest.
Show me. Yeah.
Exactly.
No, really, show me. I'm just kidding.
After this.
Keep going.
The other approach I want to cover is value. And I know we talk about in the absence of value, everything is too expensive, which is true. So we need to build value on ourselves. We need to build value on our company, our carrier. But in addition to that, there's unique situations out there. Again, we have to be professionals on it. I'll give you one example. Shout out to Bruce Brack and Forsters. But one of their member benefits is they have like an orphan benefit,
right?
Which is really, really, really cool. Now, a lot of times in the senior market, our clients may have a good plan. They may have a good price. So we may not be able to compete with it on price. But when we look at the whole situation, this grandparent, the kids' actual parents are not in their lives anymore. And the grandparent has full custody of this 8-year-old, let's just say, right? Mm-hmm. Well, that's pretty hard on them. And technically, if we got them qualified with a Forster's benefit, that orphan benefit would kick into place for free. And there's other benefits that would go inside with it for free. So although price to price, coverage to coverage, it's not as much, but this is where the benefit actually kicks in. That orphan benefit basically says it will pay $900 a month to that kid's guardian in order to take care of that kid until they reach 18 years old, above and beyond the face amount of the policy if that grandparent was to pass away. Yeah. So not only are we leaving,
it's up to 900, just to clarify.
Up to 900. Yeah. If we're leaving that amount of money, let's say grandparent passes away and that was the guardian, and that orphan benefit kicks in, that's a large amount of money paid over the month, over a year, over the next 10 years in that situation.
There are some great examples of other carriers that offer like a long-term care rider or something like that could be a benefit as well.
Free accidental benefits, free there's legal help, free wills, all kinds of community events. There's all kinds of things out there. So really understand your carriers, really know what they provide, because value
for
is
value, for the
huge.
purpose of value.
Because here's the thing. If you sell on price, you'll be replaced on price. I promise you that. There's always a cheaper plan. There's always another opportunity. Some agent at some point in time will come in, and if the only value you bring your client is price, it will be replaced.
That's right.
One is need, which is basically the wrong coverage. So if the client has a temporary need and they have a permanent coverage in place, well, that doesn't make sense.
Right.
For example, I've written a policy on a guy that bought a brand new Corvette, and he wants this to be a family heirloom and be passed down. Well, it wasn't a forever need because there was only car payments for a certain number of years. So we put a temporary plan in place to protect that asset to be passed down to their family. It would be not advisable to put a whole life plan in place that you're paying forever on a temporary need. So it has to match up. So also with that, a client can have not enough coverage, so their need doesn't line up, right? But they also could have too much coverage that they're paying for.
Right.
based upon what they need. That situation, a lot of agents don't think about that, but they could literally have other assets in place, other things in place, and basically we're replacing it for a smaller policy because they have all their other ducks in a row.
That makes sense. Cool.
This next one is really cool. It's probably my favorite. It's the combine. Okay, it's a fancy name. Couldn't think of anything fancier, but it's basically
it's French for putting things together,
adding and replacing. It's
right, Anna.
That's perfect. That's perfect. But we the whole idea behind this is obviously it's people are resistant to change. Clients are resistant to change, and they're harder to trust, especially if you just met you, right? In this situation, we are building value throughout, and we all agree that the client needs a little bit more coverage in place. We're immediately not trying to replace it and cancel them because they may have some sort of emotional attachment to their existing plan. It could be, well, that insurance company paid out for their spouse. It could be a number of reasons. But the idea is if we give them a bite size more, like $5,000 more in coverage, and we know they're paying $80 a month now for whatever amount of coverage they have now, we basically look at the option and we all agree, them and us, that we need to put maybe another $50 in place or another $5,000 in coverage in place. So now we know what the total spend will be and the total coverage will be. And when we're going through at the end and after we pick that amount, we want to write down and give them a couple options. But what if we just combine these policies into one it's imperative, after they agree to the additional amount of payment and coverage, we combine them together. Now we show them if we did a replacement, and it's not a big deal because we already made the initial sell of $5,000, right? If we did the replacement, you would now have $15,000, and the total price, instead of it being the 50 plus the 30, it's now going to be this price, which is cheaper. Now we can unlock the benefits of cash value and using these other options.
Okay, cool. We got a fly man. That's a really good one, by the way. I mean, that's very powerful. Bad policy. We've addressed this several times. Basically, this is a clean sheeted application that went through, and somehow that coverage got accepted. But if they went and reviewed the medications and they looked at the doctor's recommendations, the company would say, we are not paying this policy. So that's we run into that actually more than I.
Yeah, you do quite often, actually.
Mm-hmm. You want to explain this one, this next
one?
Yeah,
the reduced paid up. The simple way is basically freezing their insurance amount where it's at. There's generally a face amount, there's generally a cash value, and there's generally a paid up amount. Paid up amount is higher than the cash value in almost all cases. But what we would do...
It's usually double. I think it's close
around.
to it.
It's around there. Mm-hmm. But basically what we would do is we would freeze their coverage at the reduced paid up amount, which you can find on the illustration or call the company to get. Let's say their coverage was $10,000 and their paid up value is $7,000. Now, instead of it being $10,000, now it's $7,000, but they make no more monthly premiums. We take their monthly premium they currently had, put that into a new plan. That new plan, where before it may be $50 for $10,000, right? Now this $50 only gets them $5,000. Okay, we'll just say $5,000 because of the length of time. But when we reduce paid up, their existing stays at $7,000. We put the $50 into a new plan that's only $5,000. Now they're still only paying $50 a month, but now they get the $5,000 plus the $7,000. They got $12,000 in coverage for the exact penny they're paying now.
This is that same conversation. I use that same conversation many times. If we could increase. Get your daughter a check for another $5,000 without any cost to you. How would that make you feel?
Exactly. You don't generally do this too much. Usually you do a lot of the combines, but it's a good option. And typically it's more, in that example, the numbers worked out to be only $2,000 more. Typically it's more like $3,000 to $5,000 more in coverage.
Yeah. I want to skip this one. This is a more advanced one, if you're cool with it. I know we're tight on time, but if you want to hear about it, check out the coaching sessions and the courses because it's in there, right?
Yeah.
So let's go ahead and jump to the cash value one.
Perfect. Yeah.
Talk about
the
that.
Cash value one's simple. Obviously, we're not replacing it on price. We're probably not replacing it on value. That's got us beat there. But the cash value is us really opening our eyes, connecting with our clients, looking at their entire picture of a need and their entire financial structure as well. A lot of times it's important for me, especially when I know their budget is tight, but they also really want this. Again, trust, need, want, urgency, money. When we flow through that, sometimes we'll do a budget with the client and realize, because we're trying to find every way to get something in place because they really need it for their client. With that being said, sometimes they're paying on a credit card bill that's a lot of interest, that's been, really high percentage.
Sometimes they're only paying on the interest.
They're only paying on the interest. That's a lot of the case. Mm-hmm. Or they have a car payment that they're paying such a small amount and the interest, and it's a buy here, pay here, and it's just killing them, and it's going to take them X number of years to get that done. Sometimes in a situation, we are able to surrender their current policy, take that cash value, pay off one of these large debts that's costing them a large monthly expense, and then put a new plan in place to take care of the need that we're looking for. But even though the new policy costs more than the old policy, overall their budget, we've saved them $200-$300 a month in a lot of times because we could take this lump sum, pay off that debt. She's not wasting any more money to interest. Now we put a money in plan in place, and now we're debt-free moving forward.
Very good. Guys, hopefully this is helpful for you. We're going to continue on with the next 2 steps in the next podcast. But I will tell you, I dare you, go look for more training on this, and you will not find this training. Nobody's doing this training at this level. So,
especially for free.
We're out of our minds.
Right.
So, and if you are interested in the coaching and courses, it is only $97 a month. That is a steal. And what is that premium-wise? I mean, that's basically a 1-month premium for one application. It's one app, and I promise you'll get the value.
You listen to these 3 episodes, you'll get more than one app. I promise you.
Yeah. So we're excited to be able to offer these tools and resources to you guys. Check it out. Check out the website, lifeinsuranceacademy.org, and we will catch you next week. We're excited to continue the series with the final piece and help you write more business. We'll see you on the next Life Insurance Academy podcast.